Balance your trading strategy by adding futures. CME Group helps you manage risk and capture opportunities in all market environments. Capitalize on around-the-clock access to highly liquid global futures and options market across all major asset classes. Just visit your online broker and get started. Plug into valuable educational materials and trading tools and see what adding futures can do for you at cmegroup.com/on-the-tape. Listen, I will tell you, today is actually a fascinating day. And I think, first of all, as I mentioned on Friday's podcast, Ain't No Mountain High Enough, written by Ashford and Simpson, nice. Made famous by Diana Ross, nice number one. Thank you. Number two, you're exactly right. Stocks that are not, stocks who release earnings that are not up to standard are getting obliterated. Just for example, look at Peloton, look at some of these other, just Chegg, Zillow, you name it. I mean, we can go down the list. On the flip side, a name like Trade Desk, for example, TTD, the move they're having today is extraordinary in terms of the upside move on their earnings release. So you're exactly right. It is a push me, pull you situation. What I find the most interesting today on what is a benign tape, I think as we speak here, the S&P is up less than one handle. It's the fact that the VIX is VIX is having a decent little pop today. I don't really know why that is, because if you look, the IWM, the small cap, the Russell, it's actually having a pretty good day. I think it made an all-time high today of around 244.5 or thereabouts. So something's going on that I can't quite put my finger on it. I'll say this as well, and I want you to opine. I was shocked last week on the back of the jobs data, the back of the rhetoric from the Fed, just a lot of different things. The Biden's package getting through, the Pfizer news. If you had said to me all those things would happen last week, and then you asked me where 10-year yields were going to be, I would say easily 175, if not higher. And they actually traded down about 142. Now, they're bouncing today, so I can't make heads or tails of what the bond market sees. But to me, again, the most interesting thing is the VIX is bouncing today on a benign tape.
Yeah, well, I mean, listen, you got your 210 at 105, the spread there. It's just for whatever reason. I mean, longer dated yields aren't going anywhere. And, Guy, I had a tweet this morning. I was looking at like the 30-year chart of the 10-year U.S. Treasury yield. It's upper left, bottom right, and do it on a log basis. It's still, 3% would be a level where you'd have to blow through this too, which actually still is some technical resistance. And I know technicals really don't matter when it comes to yields on the 10-year U.S. Treasury. But what I'm saying is, like, just if you took the the name of the instrument or the security out and you just said, you're like, this thing's dead. It went to zero. It bounced back up to some resistance. It can't get above 2. You know what I mean? It looks nasty. It looks really nasty. And so I think the other side of that tweet was the Fed's balance sheet, Guy. And you know where that is. I know you track it closely. It just doesn't seem like, any sovereign can deal with yields going meaningfully higher, if that makes any sense. So
yeah, and obviously, no, it makes a lot of sense. And so they have a vested interest for them not to go higher. The question is, and I think this is where the two of us sort of go our separate ways, is do they have any control over it? Now, you mentioned the Fed's balance sheet, even though they're now in this taper, so they're going to be down to at least from 120 billion a month to 105. You talk if they were to stay on that present course this time next year, which is a game we love to play, you're talking about a $9.5 trillion balance sheet, quickly approaching $10 trillion, which is madness when you think about how crazy I thought it was under the Trump administration when it went to $4.5 trillion. Now we're talking about something that's doubled in basically, I want to say, less than 2 years, although I'm sure somebody will at me. So, all these things are great and they make great conversation, but what we're tasked to do is try to figure out what it means for the market. And when you have an S&P effectively at all-time highs, it's very hard to make the case that the market cares.
Yeah, the market doesn't care. I mean, we look at valuation is only something it cares about in hindsight, and I think the S&P 500, the forward PE is about 21.5, and that's well above the 10-year average of about like 16.5, 5-year average about 18.5. And again, like all of a sudden though, you have a stock like Tesla that is the 5th largest company in the S&P 500, and the valuation's really tough there. So there's a lot of stocks that are finding their way. Like just as Tesla kind of inches up, I think the argument was that Facebook's kind of too cheap, Google's kind of too cheap. When you think about it, they're kind of taking over some of the too cheap themes among the mega caps. I mean, Guy, you've been all over this AMD story. I know you like to talk about NVIDIA. I mean, these two stocks have absolutely blown out. NVIDIA on Thursday gained, I want to say, 70 or 80 billion dollars in market cap because an analyst at an investment bank said that this is a metaverse play, that their chips are going to be used in a lot of data centers that are helping to serve the metaverse, if you will. So AMD is up today. They signed a deal with Meta, that is the company formerly known as Facebook, trading at all-time highs, up 11% here. What do you make of this? You know how I feel about some of this, but I'm just curious. Let's
Well,
get your take.
now you're getting, as we like to say, in the nosebleed territories. Now, as you mentioned, I think we've been somewhat steadfast in both AMD and NVIDIA now for quite some time. We really haven't wavered on that one. And in terms of AMD, we've talked how Lisa Su, their CEO, has done a masterful job in sort of navigating. For those old enough to remember, the only reason years ago that AMD existed is so Intel wouldn't fall into the whole monopoly thing with the government. And they were sort of there just to sort of carry that burden. And Intel had the opportunity hundreds of times to get into similar businesses and do something. They chose not to. Maybe it was arrogance, bad management. I don't know. But Intel would love to be 1/10 of what AMD is today, number one. Number two, in terms of the stock, I mean, AMD already is traded 100 million shares today, typically trades 50 million or so. So you're going to have a huge volume day, which might lead to a short-term capitulatory top. And believe me, it happens on the upside as much as capitulation happens on the downside. Something to keep in mind. But the one that we've talked about now, and actually have done a really good job, I would say, with on the show at least, is Qualcomm, which for you armchair technicians out there, that 125 level was a bit of a double bottom, held that support level, bounced, had a ridiculous earnings release last week, and now it's a stock that's making new all-time highs. So, we've talked about those three specifically. There are obviously others. I think Texas Instruments gets sort of dragged up along with the rest of them. It's sort of the high, rising tide lifts all boats type of thing. I don't think Texan deserves the valuation they get. I'm not trying to, as they say, cast aspersions. That's just my view. But that's my quick take on some of those chip names.
Yeah, I would say this. When you say we, you really mean you and that mouse that you have in your pocket there. NVIDIA is not one that I've been on of late. I just, I can't get my arms around certain aspects of what's going on there, and especially the deceleration expected next year. Now, that could be the game changer, that you see this kind of meaningful reacceleration. But just to put some context around that, I mean, NVIDIA has a $770 billion market cap. It's up 136% on the. Did you lose me there, Guy? You might have
You
lost me there.
must have got called, Dan.
I did get a call. This is really annoying. I have to remind myself to do not disturb. Is that what you're supposed to do here? There's a button that says focus.
The Luddite in the group seems to have no problems.
All right, I just hit do not. All right, I just hit do not disturb. Okay, then I said it's up 136% on the year. Earnings next year, fiscal 2023, okay, are expected to grow. Let's call it low teens percent, and sales are expected to go 13%. The stock trades 66 times earnings and 26.5 times sales.
Yep.
Under no, I mean, there's no framework from a valuation standpoint where that makes any sense. So I just can't be on board. You played that breakout, Guy. That breakout last month. It was October 25th. Stock was trading 234. It broke out to a new all-time high. Here we are at 308. So, for me, I can't do that. All right, let's talk about banks really quickly here, guys. So you were talking about rates before. We got as low as 144 Friday after the jobs report. Bank stocks did not trade well. Now the yields are up a little bit, like 5 bips or something like that. And bank stocks are up, but they're not up that much. Like JP Morgan's up less than 1%, Bank of America's up about 1%, Citi's up 2%, but that's been lagging. Not great action here. What are you thinking about the banks here? They're, again, not far from all-time highs, but it seems like they're going to be a very volatile play along with rates.
It's amazing. Couple things. Yes, you're right. They're obviously showing their rate sensitivity in terms of how they traded late last week and how they're trading today. So you're right. What really stands out to me is how shitty. Yes, I said that. Letter C has been trading. I've been of the belief.
Wait, first things first, Guy. Have you ever called it by accident on CNBC Shitty Bank?
I have not.
Never by accident.
I know you'd love me to do that.
Maybe I'm in your head, and tonight maybe you
No,
do it.
no, it's you might be
head.
in my head. Maybe I will. I mean, that would make for good TV. Just as an FYI.
Yeah.
No, listen. What I've said, and I actually still believe this. Anytime Citi trades at about 85% or thereabouts of tangible book, and I do think, given their last earnings release, tangible book in Citi is just north of 77. The stock typically is a buy. So, it's really traded poorly since earnings in the wake of other banks trading much better. I think you have said, 2 years ago, Dan, correct me if I'm wrong. You said that Morgan Stanley was one of the best looking charts you've ever seen and one of the best financials out there. That proved to be prescient, which has a C in it, which I love, by the way. Well done by you. I've mentioned Blackstone. You've pointed out that it's not a bank, correcting me, which is lovely, but it is a financial. That stock continues to make new all-time highs. So there are some things. Oh, and by the way, Morgan Stanley, which completely just revamped their business in the course of about 5 years, going from a second tier, yes, I said that, investment bank to this multifaceted, three-pronged animal with three very distinct revenue streams. Good for them.
Yeah, good.
And they
good
probably
on them.
deserve this move.
$100. All right, Guy, I want to talk about one that reports after the close tonight. It's PayPal. We
Sure
talked a little bit last week about the price action in Visa and MasterCard versus after their results, very disappointing, versus American Express, which broke out in a big way after their results. They're benefiting from, consumer discretionary spending on the higher end, from travel, corporate travel coming back, that sort of thing. But look at the payment guys. So Square reported last week. People didn't love the number. Stock was down a little bit. It's not really bouncing today. But look at this PayPal. They report after the close tonight. And if you look and see how precarious this little price action over the last few days is in and around $230, and you draw a line all the way back to the February low and the March low, you're right on top of that. The 200-day moving average all the way up there at 266. Okay, if these guys miss and guide down, and don't forget when they reported in July their Q2, big gap. Remember that gap?
Yeah, they did. I think the stock was 307.
Yeah.
So
here we are.
I pay attention. Cheapest thing you can do.
It looks precarious right here. Now, granted, a beat and raise, and that stock is literally headed back to 250 in a heartbeat. Like that's an easy one. The stock has never really recovered since they floated that trial balloon about maybe paying $40 or $45 billion for Pinterest. But to me, this one feels dicey. Give it to me.
Morgan Stanley, I think, came out and defended the stock long term. I think if I'm wrong, please, again, don't at me on Twitter, number one. Number two, valuation doesn't matter until it does. And I'm glad you brought up Pinterest, because I think what that told the street, or what that told traders, investors, whatever these people are, is that, hey, wait a second, maybe they're concerned about sort of their growth their growth in the future. And they have to make a move like this that a lot of people will think maybe interpreted as a bit of a panic move. And I think it's not so much Pinterest as what that sort of represents in terms of their growth forecast. So that's number two. And number three, you're right. 225 is a huge level on the downside. I think that was a low back in March of this year-ish. You break through that, and it's
Well, what's fascinating, Guy, is that I'm looking at there's about 52 analysts who cover the stock on the street. Okay, 42 of them rate the stock a buy, 8 a hold, and only 2 a sell. The average price target is 320. The stock is 230. And it brings me to another story that I think is really interesting, because this is a behavior obviously accelerated by the pandemic, not too dissimilar to peer-to-peer payments and electronic, payments at the storefront, that sort of thing. look at Peloton, like this stock gap lower, and then today gap lower. I mean, it was down
Hmm.
10, 11, 12% at its lows. And so I fear that if PayPal, if there's, disappointing results in guidance, it's like they're not going to discount it. That stock's going to get like smeared. So,
Peloton is obviously very Peloton specific, and I should have known when I started seeing those commercials during the Ranger games or the Nick games or some games that they reduced the price of the bike from, I think, 1,900 to 1,450 or something like that. That
yeah.
that that did not augur particularly well. By the way, there was another warning sign a couple months ago when they announced they were getting into apparel. I should have realized then that something was a bit amiss, but I didn't, and that's just that
No,
we live and learn,
you
right?
might have been speaking out loud on that one, guy. Live Nation, interesting. So one of the things that I found, Tom Lee has been all over this kind of epicenter. He's calling those the stocks that should benefit from like a full reopening. And in his note at FS Insight, I think it was last night, he was talking about Merck and Pfizer and how these pills, these antiviral pills, could basically end the politicization. How do you say that? Um,
Yeah,
of
the way
of
you just
the
said it.
of the vaccine, meaning that there's just going to be a lot of people who just don't want to get vaccinated. If they know that you can take this pill when you get sick, and it basically guarantees that you won't die for the most part from COVID, then maybe we can kind of move on here. That would be a beautiful thing. I think it's going to be hard to have a medical consensus that people shouldn't be vaccinated and rely on this antiviral. But his point was that, all the airlines, hospitality, all this other stuff should do just fine if this thing is widely available, because then you can get rid of the mandates, and the mandates are obviously suppressing certain behavior among some consumers. That all makes sense to me. I mean, listen, I don't know about you, man, but every time I was at the Knicks game last night, and every time I'm in a
What a
place.
shitty game, by the way. I
Yeah, it
mean,
was.
the Knicks have not played
uh,
well at home this year, which is surprising, given what they were able to do last year and given the team they've put together. By the way, I love this team, but you can't lose to the Cavs
nope.
at home on a Sunday
Well,
night.
you know who they have
Hopefully, they'll
Wednesday.
acquit themselves better. I think they got the Sixers tonight in a quick turnaround. Anyway,
Yeah,
please continue.
and then they have the Greek Freak coming to Madison Square Garden,
Yeah, well, they
which
beat the Bucks on Friday,
that's
which
right.
really, to me, I'm like, that's great sign. They're able to beat Milwaukee in Milwaukee. Anyway, please, I know that's not what you wanted to talk about.
No, it wasn't. But my point is that every time I'm in a place like that, it just reminds me we are literally this far away from this pandemic being over, and then we have to start thinking about what does normalized life look like? What does it look like relative to before? But now we have certain behaviors have just been massively, accelerated, and we're not going back. And trying to figure that out from an investment standpoint is also, Guy, what we are charged to do. All right, we're going to take some questions, so
Hold,
please.
can I just before we cue
Yeah,
people
no, I'm
up?
saying I just wanted to say cue them up. You're not. I'm not cutting your
No,
mic
no,
off,
cue these
bro.
peeps up. I want to say a few things. Are you familiar? So this time last year
Yeah,
on CNBC's Fast Money, we played. What's the thing when you link letters together? What do they call it? An acronym or something,
yeah, they
right?
call it an acronym.
Yeah, and you had a great one with the MAGA stocks, and so we were tasked with creating our own acronym for stocks. And if you recall, which I know you do, I came up with HOPE for 2021. That was my acronym, and of course, the names that comprise HOPE are Home Depot, which has just been on fire,
Yep.
Oracle, which you laughed at me about, by the way. Look at what Oracle has done.
On fire, 95
Palantir,
bucks.
Palantir, which is about to report earnings, be on the lookout there. And the E in the Hope trade, which is why I mentioned this, was Expedia. And look at that stock, Dan, over the last week or so post earnings, given, and I'm just trying to say in the spirit of what you were just saying in terms of the reopening trade. Back to you.
Yeah, well, I mean that's it, man. I mean, like, look at what Airbnb's doing today. Look at what some of these airlines did on Friday in the immediate response. I mean, that's the sort of price action that we had on November of 2020, right? When we got the vaccine news. I would say this, Guy, you kind of piqued my interest in this Palantir, which is the P in your hope trade.
Oh,
Look at this thing. It looks like it's kind of this like little rolling wave sort of thing here, and I guarantee you this has a shit ton of short interest. No, 5%. But when do they report? When do they report?
Palantir reports, I want to say on the 14th. I'm probably wrong. I got
Tomorrow?
to
No,
look.
tomorrow morning before the
Tomorrow.
opening. Tomorrow morning before the opening. Wow.
By the way, I'm not divulging non-public information here. This is actually, the thing about Palantir, and I'm a bit off topic. I know they
You
like
are.
to they like to hold things pretty close to the vest if you know anything about that organization. And if you sort of peruse their website, there's a crypto component, a crypto I want to say a crypto security component of that company that is not being addressed that I don't think people
Oh,
fully are aware of. And when they are aware of it, I think the stock is a double. Anyway,
all
back to
right.
you, Dan.
That's really interesting. Just so you know, for you people out there who like to
Okay.
look at
Okay. Now, when you say
who
that's
like to
really
look at
interesting,
implied moves. Hold on, guy. So the weekly 27 straddle, that's the call and the put premium. You put them together, and it's about $2.70. That's about 10%. If you were to buy that straddle, that's the implied movement, you would need to move 29.70 or higher. Or if you do the math, guy, you'd have to do 24.10 or lower if you were to buy the straddle. Now, obviously, if you just bought the put or the call, it's about $1.40, $1.35 or something like that, and you're risking 5% of the underlying. That seems like a lot. The stock has been public for 4 quarterly reports. It's moved on average about 10%. There you go, guy. There's a little options action for you.
nice. I love
Uh,
the. By the way, I know you don't care about this either.
nope.
I was on the OA on Friday with Coco Beware and CB Dubs. I enjoyed it a great
I
deal.
love those
Anyway,
guys. I
please.
love those guys, and I miss those guys. All right. Do we have a question? Amanda was maybe teeing up some questions here.
We have stick to stock Sloan. Sloan, of course, was the girlfriend in
Ferris
uh,
Bueller.
Ferris Bueller's Day Off. She fell off the face of the earth after that movie, which was unfortunate. By the way, Matthew Broderick is a genius. Back to you, Dan.
Agreed.
Good afternoon, guys. Thanks for taking my quick question and putting this together. So last time we spoke, we did the gold or the dollar few weeks back,
I
which
recall.
has worked. But I like to look at like long-term market cycles too. And something interesting kind of crossed me was, back from the Great Depression, 1932, 55 years is a Fibonacci number. That was 1987. And the next Fibonacci number is 89, which would be 2021. Do you guys feel like we are sort of getting to some sort of significant inflection point from market cycles?
Are you talking about broader? I haven't looked at that, by the way. I'm fascinated by. I'll take you at your word. Obviously, you've done work. I'm fascinated by it. Do I? The answer is yes, but I've thought that for I can't even tell you how long, and the market continues to do this grind. So, just when I think something's come up that's going to derail this, the market takes it maybe for a few hours, maybe a day, and then it just looks right past it. We continue to grind forward. I mean, I still think. Listen, I can rattle off 5 things. You know what I'm really most terrified of? The fact that things seem to continue to escalate in terms of China and Taiwan. Nobody seems to talk about it. That's going to get worse before it gets better. Oh, by the way, you have a major energy problem in Europe that nobody seems to care about. I mean, there are all kinds of things that we should be worried about. Dan just talked about the valuation of the S&P 500 in historical terms. You're talking about a couple standard deviations away from the norms. I mean, all these things are concerning, but again, it's just this buy and smile mentality and buy the dip and everything's okay that's worked for people. And I'm not, again, second time I'll use this. I am not casting aspersions. I'm just sort of speaking fact here. Dan?
Yeah, well, it's interesting that you posed the question to Guy. You're using data dating back to the
That was good. I was waiting for that.
the
Thank
Great
you, Dan.
Depression, because Guy remembers what that was like.
It was tough growing up.
Trading through that. Yeah, listen, man. I'll just say this. So if we don't have a 10% peak to trough decline this year, which it doesn't look like at this point, we are. It'll be like the 5th year and maybe 40 or something that we have it. Now, I don't have all the data that shows what the market does on after the year after or whatever, but since the start of October, the S&P is up 10% in what feels like a straight line. I mean, the fact that we've made like new high after new high after new high for like a week and a half straight, that's just not particularly natural. Now, you could say to me that there's other things going on here. It's rates continue to stay low and there is no alternative and this and that, whatever. But it's not healthy. And we started this conversation talking about, Tesla has gained a $500 billion in market cap in a month. Nvidia has gained $300 billion in market cap in a month. Microsoft, the largest equity by market cap in the planet, has gained a $500 billion in, it's up 20% in a month. There's nobody who could sit me down who's much smarter than me and has much more experience than me and has much more skin in the game can tell me any sort of scenario where any of that makes sense. And so to me, guys talked about the VIX popping on Monday. Okay, VIX often pops on Monday because it kind of sells off on Friday because of the 2 days that it's not trading and it's not whatever. It could be that just people are scared shitless at this point. They just don't know what to do. They're looking at other pockets of risk all over the place. They're looking at this crypto punk 658 or something like that. That's literally a floor price of $10 million that literally was dreamed up by a computer, to be honest with you, that just kind of punched out a bunch of crypto punks. You don't even know what those are, but they're trading for millions of dollars. So, there's a lot of money flowing to a lot of parts, there's an article in the Wall Street Journal today about the hottest market, one of the hottest markets in the world, the art market. They're buying everything that is not clamped down. And that's just a really weird situation to me. I felt this way before. People, if you remember what it was like in the late 90s, of like 99 was a scary ass year. I'm just telling you that. And 2000 was the sort of year where all the Johnny come latelys got in there. It wasn't the people who were like riding this thing out. I don't think there were a lot of true believers. Everyone knew it was going to come to an end at some point. It just came in a way that, there was still lots of fits and starts or whatever. It wasn't 100% certain that it was over, and it wasn't 100% certain that it was all going to crash, but it did. And I think a lot of people felt the same way. Go watch The Big Chill or The Big Short or whatever movie you want